Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities trended higher as risk sentiments improved last week. The US equities rallied even as consumer sentiment fell to one of its lowest levels on record amid hopes of a de-escalation in tariff battle between China and the US and President Trump's softening stance on ousting Fed Chair Powell. Asian equities rallied, led by Greater China markets and the exporting sectors on hopes of easing trade tensions. For the week, China offshore, Taiwan, Hong Kong, Indonesia and Singapore rose around 3% each, while Thailand, China A and Malaysia lagged the peers, rising about 1% for the week. China's on-budget fiscal revenue and expenditure growth both improved in March, with data suggesting FX inflows. Back home, the Nifty index rose earlier in the week on positive global cues and improving foreign investor flows, but pared gains later in the week amid weak earnings reported by corporates and escalating Indo-Pak border tensions. Broader markets outperformed Nifty index for the week, with the Nifty Mid-Cap Index up 1.7%, while the Nifty Small-Cap Index was up 0.8% for the week. Among sectors, IT and auto led the winners for the week with gains of over 2.9%, while utilities and telecom led the losers with cuts of over 1.3% for the week. The Indian fixed income market had a volatile week. After declining initially, Indian government bond yields rose after the RBI revised liquidity management adjustments, requiring banks to now maintain a 2.5% buffer on digital deposits, impacted demand for government securities. For the week, the yield curve flattened, with the 10-year Indian government bond yield falling 1 basis point to 6.36%, while the 3-year and 5-year government bond yields rose 3 basis points and 4 basis points respectively. Brent crude oil prices edged higher on Friday, closing at $66.9 per barrel, but still posted a weekly decline of 3.3% under pressure from market expectations of oversupplying conditions and uncertainty around trade tariff talks between US and China. The INR came under pressure later in the week to close at 85.45 per dollar, down 0.1% for the week amid heightened Indo-Pak geopolitical tensions and weakness in the domestic capital markets. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.